you for joining us. And Kura, over to you.
Thank you, my dearest brother. It's excellent to be here. And today, I don't know how we got it to be this way, but we seem to have a very strong Zimbabwe focus. But please let us not exclude anybody. Thank you, everybody who subscribed. I hear the numbers are quite strong and exciting, and I'm grateful for that. And it's this, we're almost through second quarter of the year or first half of the year, whichever way you want to look at it. And I'm grateful, as always, to speak to the Africans who dial in from wherever you are for us to just share ideas. We always get experts who know and have deep knowledge in their particular sector, but anybody, we are a democracy. As we're seeing South Africa busy with its elections, we are a democracy, one man, one vote, one woman, one vote. You're welcome to put in your comments, ask questions, and we're here to engage you. So if you haven't been on one of these calls before, we tend to keep it quite informal. We're not here to lecture anybody, but we do want to share relevant information. We have been doing this series for at least 1.5 years, and we get sector experts to come across and share their views. If you want to share your particular view, please contact myself or Tabiso, and we will happily put you on the roster. I believe we've covered about 11 African countries, Rwanda, Uganda, Malawi, Zambia, Zimbabwe, South Africa, Botswana, Ghana, Nigeria. So it's absolutely open. We are keen to understand and know and love. So today I have two guests, and my guests are local with me here in Harare. I'm currently sitting in Harare and just taking in the sights of this city as we get it ready for our SADC brothers and sisters. We have the SADC Heads of Government Summit coming in August. So we're busy changing the curtains, carpets, and making the city look beautiful for you guys. So you can come and spend your money when you come here. So I'm going to take a short introductory period on my perception of the Zimbabwe property market, mainly skewed towards Harare, where the activity is. And then I've got an exciting guest, Patience Patongamwoyo. She is with Seeff. She is the licensee of Seeff, you know, the company or the franchise brand out of South Africa. She's got something quite exciting where she is taking the Pan-African view, and Zimbabwe is not big enough for her. She's deciding to take on a challenge and spread her wings across the border. And then the Harare market has really been shaped and transformed by, I call it the South African mindset, where developers are coming in and unlocking opportunities along the roads, looking at local development plans and seeing what can be done, and addressing the affluent market that I believe rides on the back of the US dollar and the US dollar availability in Zimbabwe. So I have the leasing executive from Terrace Africa. I will call them Zimbabwe's leading developer, and Gideon will take us through what they are doing and how they are viewing the market. And I'm sure the surge in numbers that we've had on this call today was because people want to hear and talk to Gideon. So I trust that my screen is shareable. Y'all seeing it? Tabiso, if I can get an...
Yeah.
Oh, yeah?
I can see. Yeah.
Okay, good. Right. Okay, so this is not a master's dissertation. It's just a helicopter overview where professionals are letting each other know what's going on. I think that our bellwether, and when we look for property investment, yes, we can have it in our personal capacities. A lot of us are trying to play things in the residential space on a personal balance sheet. But as an industry or as an asset class, I wanted to take a look for where the smart money is moving and how it is moving. So just to dabble on what the pension fund's view is on real estate, then try and describe the economic geography. Some of us live and operate in Zimbabwe, so we know, excuse me. so we know and are familiar with it, but perhaps some of our African brothers don't know what we've got on the ground. So I'll give a bit of a shape to the economic forces that I believe. And Patience, when you come on, and Gideon, when you come on, you're more than welcome to disagree or share another alternative view. Then we have, because real estate is what it is doing in Zimbabwe, we have fundraising requirements. I'll showcase two opportunities and the kind of scale where people are looking to raise money in the market. And then I'll give what I find interesting anomalies in the market activity. So let's start with the pension funds. The pension funds are really, really relying on real estate for two things. Because financial assets, being money in the bank, even shares on the stock exchange, we have two stock exchanges. The returns on those stock exchanges have not kept pace with the currency depreciation. At the beginning of the last month, I believe, we had the new governor come in and he wanted to bring some stability. And the response from the market is we haven't found our feet yet. Our pricing on the stock exchange, the currency was a Zimbabwe dollar. It is now a ZiG. A ZiG is a US dollar and gold-backed currency. So we're trying to establish a price for that in the market. The Reserve Bank does establish a price and put out a price that we're supposed to trade at. But when you're valuing shares that are receiving multiple currencies, I think the stock exchange has had some value volatility there. So the bellwether where pension funds are looking to protect value, and increasingly rentals are all paid in US dollars. So to access that US dollar, the pension fund, the savior for the pension fund, is holding real estate that holds its value even in Zimbabwe dollars. You'll see when listed funds report results, there's always a write-up in value. If you look at our financial institutions, our banks, at least half of their trading profit for the year comes from the revaluation of landed assets that sit on their balance sheet. So property continues to be a bellwether. It is 50% of the holdings of pension funds, which is a heavy preponderance in this asset class. But because of the attributes that it is holding value and it's cash flowing in US dollars, we have the regulator support. We have the Insurance and Pension Funds Commissioner. They write a letter when a fund is seeking to raise capital, and then they do a motivation to the Ministry of Finance and Economic Development. And then the Ministry of Finance and Economic Development, if they see merit in that, they grant prescribed asset status. So prescribed asset status is very useful when you're raising capital in the market, because pension funds need to invest in mandate and within certain bands and thresholds. So this provides a juicy seam for investors to have the avenue to have their investments preferred when they're going into real estate. So the economic forces on the ground is the ZiG, the Zimbabwe gold, our new currency. Its physical manifestation remains quite tight on the ground. The central bank has not issued a lot of it. So there is a there's a liquidity squeeze when you're trying to meet your obligations within local currency. I think that's only going to be exacerbated when it comes to make quarterly payments to the receiver of revenue, or the Zimbabwe Revenue Authority, as we know them in Zimbabwe, that half your taxes can be paid in local currency. But that local currency is not readily running around. So we have a liquidity crunch in Zimbabwe dollars. In the US dollars, we see that there is increasing lending by the banks that are local. The interest rate is anywhere south of 20% for an individual, or a company. You're likely to get in at 15, 16, 17%. At the last monetary policy statement put out by the Reserve Bank governor, the base lending rate was described as 20%, so we're still within that. But the property sector continues to borrow, but it's mainly for working capital within construction as a sector, but it doesn't end up in long-term mortgage finance. So of all of the money that's out there lent to individuals and corporates, less than 5% of the national book is sitting in a mortgage anyway. Our market has activity. I think the best bellwether or the most visible is the Tigere REIT, listed a year and a half ago. They have paid out their fifth dividend, if not the sixth, I'm not sure, but they are a fund that owns Highland Park, an asset that looks quite familiar to anybody who's been in Lusaka, in Fourways, a typical box retailer, FMCG anchored, and then line shops that cater to the better well-off who want to buy some ice cream, have a cup of coffee, buy some imported liquor. So Tigere REIT is paying dividends. As a REIT, it has to pay dividends, but the underlying assets, not much capital gain in the asset on a year basis. They had marked to market in US dollars. So there was, I think, a 1% uplift in US dollars in their results, but 100% occupancy. And notably, they're paying out all of their dividends in United States dollars. When they listed, they had said they expected a 70-30% split, 70% US dollar, 30% Zimbabwe dollar, but they've been overtaken by events in the market, and 100% of the payout is in US dollars. Our second listed fund is the Revitas REIT. It has just paid out, it has just got through its first quarter. It listed last year, and it's a development fund. So they're in a capital raise phase, but the existing assets do have a profile, but largely CBD properties with CBD tenants who they were looking to transition out before they refurbish to create long stay apartments within the CBD. But as REIT rules declare, you must pay out the cash that you have on hand. So they've paid out their first dividend, a quarterly dividend of 45,000 US dollars, all of it in US dollars. Coming to the market, we have a fund manager bringing assets to market. They're currently developing, amongst others, a retail mall in Mazoe, and I believe some hospitality assets. They were granted PA status, if I recall the reading correctly, and they will come to the market at the tail end of the year. We see listed companies looking to create value out of assets that sit on balance sheet. So the listed contractor, Masimba Holdings, has a pipeline of something like 3,000 stands to develop. They're doing their first batch of about 300, and they're looking to go for that low-hanging fruit. A 300 square meter service stand is the space that they're looking at, so they're going to be playing in that area. Wildell Bricks has similarly relinquished some land to the northeast of the city of Harare, where they are going to be in partnership with a number of partners developing retail, residential, and some industrial stands. So it creates the opportunity for smaller players, not necessarily at pension fund level, at multi-million-dollar level, but individuals, owner-operators have been picking up industrial stands. The industrial price market can be anywhere from $70 a square meter to particular nodes like Pomona, where they're touching even US $200 a square meter. It depends on what use and who you've got around there, but there is a lot of demand for companies and individuals or high net worth individuals to invest in landed assets. Central government, as I had said earlier, is spending a lot of money on tidying up roads. So when you come as a delegate from anywhere else in Africa, by the time you've landed at our brand new airport, built at 134 million US dollars by our friends, the Chinese, you're going to travel on a lovely road all the way to the new parliament, which was also donated by our friends, the Chinese. But off the back of that infrastructure, the city of Harare is getting some new roads, so some new shoes to show off that things are moving here. I'll get speculative here in that the market activity in the residential space, we are seeing a lot of people are grabbing hold of the stated policy by the city of Harare that they want to see densification. So densification is dragging, not dragging, it is causing transformation along arterial roads where there's existing sewer, because to get your development permit on the existing sewer, because of the densification, you can't do septic tanks. So in particular nodes, in particular areas, Marlborough, Venona, Newlands, you see people looking to develop clusters. as our population is aging and wanting more safety and security, more lock up and go, people are more exposed. As people get exposed, the idea of a 400 square meter stand in a 200 square meter apartment or townhouse becomes effective. So the first green block there, I'd call that developer land pricing coming through. So on bigger stands in these prime areas, the northern suburbs, you see that is 2.5 acres, and they're asking for 1.1 million US dollars. That's a whole lot of money, and it's not sustainable from an owner occupier or somebody to stay in that spot, but it does become reasonable if you can pack 60, 70 units on that kind of ground. So the pricing that we're seeing, the stock is old and it's coming to the market where developers are recycling it into the market. Then that's what I can see and understand. What I can't see and I can't understand is what I'll call, and I'd love to hear Patience's view on what I call the Borrowdale Brook bubble. Borrowdale Brook, for our African counterparts, it's our Pakalane estates in Gaborone, it's our Dane Fern in Johannesburg. I can't remember the name of it in Ghana, in Accra. It's a gated community with a golf course and where the big boys live. So we have seen immense demand. A lot of our activity around Zimbabwe has been mining driven, and that has brought with it not only Chinese, but a lot of Chinese and other nationalities who've come through. And this seems to be their preferred location for their executives. And the pricing in that node is just mind-blowing. So if you start doing the mathematics of absolutely it's a trophy asset, absolutely it is not something that you're going to find and replicate very easily, but 7,600 square meters in the brook on unimproved land is asking for $1.5 million. If you do $1.5 million by 18.5 Rand, and I came down to Joburg, surely along Mount Road or Eccleston Crescent, I could find something similar. So there's the ongoing argument with prices in Zim that we're too expensive for ourselves, but the reality is the bubble is the bubble and people are buying in. There is a completed property within the brook at 2.3 million, and I think I could find something of that quality or better on the Atlantic seaboard or inland on one of the wine estates in Cape Town, which I think would compare favorably on pricing. But that's a personal opinion, and we shall see how the market takes us. Real estate assets being in demand, guys, in the market currently, we have the Mosi Hospitality REIT. The Hospitality REIT is being brought by an active pension fund, the Zimbabwe Electricity Industry Pension Fund, active developers. They have recently completed the successful Marondera shopping center, anchored by a FMCG retailer, Bon Marché, and then a large hardware, Bola Hardware out in Marondera, but they're coming to the market. They have seen a gap for a larger establishment, hotel plus conference center in Victoria Falls. So they put together a bold plan. To the capex expected is $49 million. They've committed themselves $25 million, and then a fundraise for the 24 in between that. Within Harare, a listed developer listed on one of our stock exchanges has kicked off a project, a joint venture with the city of Harare. The city of Harare had a defunct golf course, and the developer is in the throes of raising capital. They have explained that they expect to announce a major international partner coming on a $300 million mixed-use gated community, being the Hills, located on the Warren Park or the Warren Hills golf course. So that's my snapshot of the real estate world in Harare or Zimbabwe as I see it. And I just wanted to kick that off just to have a place to start. But I'm going to now ask, and if she's ready and she can get herself ready, I'm going to stop sharing my screen. Here we go. I'm going to ask Sister Patience. Are you ready, Sister Patience?
Yes, I am ready. Good evening, Kura.
Good
and
evening
everybody
to you.
on.
All right. The floor is yours. Over to you, ma'am. What are you seeing in the Zimbabwean and Seeff? How many offices are you operating currently here? What are you seeing when you're having your Monday morning staff meetings and talking to the agents across the country?
Thank you so much. Currently in Zim, we have 3 offices, although we're looking at expanding. We're launching our Mashonaland West office quite soon because we've had a lot of business coming from that end. So in terms of the market, it's active, but not as active as it was just before the monetary policy.
Okay.
I must have lost your other question there.
Okay. What sort of stock is moving?
So residential has always been moving. We're actually quite big on residential, and we've noticed it's moving, although it has slowed down. One of the major challenges that we have is it is overpriced. I think you are aware that since last year, government has been buying, and they tended to push the prices up. So where you have your membrane, which would ordinarily cost between 85 to 110,000, we're having sellers requesting as much as 150,000. So we are hoping it will stabilize soon. But for serious sellers who really want to sell, the stock has been moving because the properties are being priced correctly. So the overpricing has just been the major challenge. Although, whilst we may say even if it normalizes, it's still way above our South African counterparts, like you did mention. And that's mainly being driven by supply and demand. I think you are aware that in Zimbabwe, we still have shortage of property, and the major developers being the private developers, we haven't really gone in and brought in as much properties as we would want. The private players, when they come in, they're coming in to make a profit. So it's not as cheap and it's not as affordable to the ordinary person.
All right. So you mentioned something about government being biased. You and I are locals here in Zimbabwe. Explain to our Pan-African audience, when you say that we've got government nostro and that's distorted the market, take us through what that means, what that is.
Okay, so when the government does buy, obviously there's a lot of people, there's a lot of money on the market, and I think we all know what money does to property prices. It tends to move, and everybody tends to think that they can get a lot. So in Zimbabwe, we do have the nostro, which is our normal transfer, our normal money in the bank, and then we also do have cash sales that do happen. So nostro, obviously, the government was buying through nostro, so there was a lot of money circulating, which obviously pushed property prices way up because they did buy quite a lot.
Yeah. So you would say that's a temporary phenomenon, because what you would see is a civil servant, and it started right from, if you're a member of cabinet, I think you got about 500,000, a deputy minister got about 400,000. When you go into the market, our market has a natural level of stock, particularly what they call our golden triangle. You're not recreating the suburbs, those old colonial suburbs on an acre with a big house. When people come in with that kind of money, they start gobbling up the stock. And once you bought all the 400,000 stock, and you're still, somebody else gets a mortgage, then they will then outprice and outbid the guy with the 300,000, and then that cascades down, and it really must make your valuation guys quite nervous, because what you list at and what you sell at, there's easily 30% between those two.
Yeah, I think that's you've articulated it quite well. We did have even sellers now bidding for properties because there was just nothing available on the market. So your $300,000 properties were going for as much as $450,000.
Wow. Are the rentals keeping up with that to give people any sort of reasonable return? What sort of a yield are we coming out with if we look at these elevated prices?
Okay, so rental, well, that's our bread and butter. We specialize in rentals. I think we do have a massive rental portfolio with only 2% default rate. And, I say that with so much pride. So as you know, in Zimbabwe, if you want to invest in property, in rentals, you can only invest in the high density, which give you a yield as much as 14%, 14.5% if you invest well. But if you're looking at investing in the northern, which is your northern suburbs, you're looking at an average yield of about 3 to 4%.
That's quite a disparity, huh?
It is.
So the question I'm always asked is, Kura, why are there so many clusters going up? And I said, I'm not the one building them, so I don't know. Let me ask the experts in the game. What do you see as the prognosis from a demand side and a supply side, and how do they meet in the middle on price on these clusters that we're seeing going up?
So the issue with clusters is those that went in first are the ones that made the money. So right now, everybody thinks there's a lot of money to be made in clusters, but there's not much money to be made in clusters. And what we are seeing now is those that are living in clusters who don't want to live in clusters anymore, because you'd find that clusters have an average age group of about 25 to about 35 when the kids are still young. But as you get older, and your kids get older, people want their own space. People are tired of fighting with neighbors over unpaid rates, over security issues, over a whole lot of issues. So yes, there had been a drive to build clusters and also to densify. But you find that I stay in my Vinona house, $450,000 worth of house, and then I'm sitting on 4,000 square meters, and then I have my neighbor sitting on maybe 400 square meters. New cluster, but value is exactly the same. So people are now waking up to realize that, you know what, it's more expensive to be in a cluster. I can have my own space and densify to a certain to a certain point that leaves me with a lot of space. So yes, the drive has been there initially, and people thought they would make money, but now not much money is being made as those that made the money before.
Okay. It's just you and me on the call here. We don't have 36 other people listening to us, so you can give away some trade secrets. What sort of profit are developers targeting when they're doing these cluster developments? What would you speculate?
They're looking at, for what I've worked on, I think they're getting as much as 100% profit.
Wow.
It just depends on where you source your material. I think you are aware that in Zimbabwe, you just need to know where to buy and how to play around with your figures. So they're getting as much as 100% profit and even more.
Wow. Yep. Okay. So that's where we are on that. The activity outside of Harare, what can we look forward to? You said you're opening up a branch in Mash Central. What's going, or Mash East? What's going on there? What's drawing you out there?
So in line with the government vision, leaving no one and no place behind, we do have quite a lot of developments going everywhere, because our target market mainly is the diaspora market, and the diaspora are not only limited to people that reside in Harare. So there's been a lot of demand in the other areas, Bulawayo, in fact, the whole of Matabele and Gweru. So we do have quite a lot of developments that are happening and a lot of takers that are there. So the only challenge has just been that it costs the same amount to develop land in Harare, in Harare and or Bulawayo or Mashingo, but it costs 3 times more to buy it in Harare than any other place. So you then had a lot of developers more of concentrating on Harare because that's where the profit is. But now, because the demand is there, we now also have other developers coming outside, although the profit margin for them is not as good as Harare. But obviously, Harare, we are getting to that boom where we then are going to be another Johannesburg where there's more properties than the takers that are there.
Appreciate that. So all 42 of us on the call, this is by no means a one-man, one-woman conversation. If you've got any questions, please raise your hand or pop them on the chat box, and we're here to help and answer. So, Sister Patience, I follow you quite actively on your social media and the work that you do. I hear that Zimbabwe is no longer big enough for you, and you're taking on a challenge across the border.
Yes, that's very true. Yeah, I love challenges. I resonate well with the eagle.
So where are you going and what are you doing?
Okay, so I will be opening Seeff Mozambique. Well, we're gonna put our headquarters in Maputo, but we are hoping to grow through the whole of Mozambique. I think you do realize Mozambique is quite massive. Population 34.8 million. It's ranked number 45 in the world. Growth rate 2.85. GDP, according to the IMF, is 21.94. According to the United Nations of 2022, it's 18.1 billion. And Mozambique has almost 3,000 kilometers of shore. So there's lots of opportunities there, I believe.
Okay, so you're going in on an agency basis. What fish are you looking to catch out there?
So we are going in on a lot of fronts, valuations. We've been doing quite a lot of valuations in Mozambique. So we are going to do our valuations. We're going in to do our developments because we noticed that the people from across the oceans are already there, and yet we Africans are just sitting at home, hoping for change to come, or hoping for a lot of things to happen. But we want to go in and do developments because there's a lot of opportunity that we've realized. And I think it's also like any other country in Africa, where when you look at the infrastructure, Africa's biggest opportunity is infrastructure development. So we're also looking at that. So it's just not the agents, but the agency will complement the other big things that we're looking at.
Okay. Any particular sectors that you're looking at? Is it residential? Is it across the board?
So we do have some partners that we've partnered with. So it's all the sectors that we're going to be looking at. So we've got specialists in the different sectors. I think you do realize and appreciate that Mozambique is quite massive. So we are specializing each office.
Okay. So am I coming to you with some investment funds to say, hey, Patience, if I've got $1 million and I want to invest it in Mozambique, can you help me with that kind of advice and guide me on opportunities, structuring, locations with a story?
So right now, I think you do realize that the land in Mozambique is on leasehold, and we are still trying to find our way on how we can put in major developments and be able to get deals. So that's something that we're still working on. Mozambique is quite different from the rest of Africa. So I think that's why a lot of people were afraid to go into that. So you'd find that even when you value property in Mozambique, the thing you're valuing is the improvements that's on the property, because the land does belong to the government or whoever it belongs to. So yeah, we will come with the opportunities that are there, but right now we are still talking to the respective offices and also trying to get a position on how to proceed forward.
No, this sounds very, very exciting. At a high level, how are you seeing the development of retail in Mozambique? Is it I know there's the gas exploration that's happening up further north, somewhat interrupted by terrorist activities. What is the average Mozambican looking for? What is he spending money on? Take us give us a word picture of what that property market feels like.
So with Mozambique, when you're going into that particular market, you're not even targeting the locals, because the locals have their own way of living, which is totally different. But because of the activities that are happening, it's the expats that you are looking at targeting. They are the ones that have the money. So they are the ones that are looking at, because if you look at, I'll take Maputo, for example, you've got the Turkish, they've set base there. They've got their developments coming in, they've got their shopping malls, they've got their restaurants. So it's like a mini Turkey. So you're targeting the expats that when you go to Mozambique, the locals, they're not worried about much. They live in their Dombo showers there, and they're quite content there.
Okay. Okay. No, we wish you great success, and thank you for waving the Southern African flag. And if there's anything any of us can do to help, I'm sure we're going to support you in what you do.
Thank you.
All right. Really appreciate you joining this call. Thanks so much. Right. My third and last speaker for the afternoon is a young man, Gideon Nhamoinesu. He is the leasing executive at Terrace Africa. Terrace Africa, I believe in their history, they have done over, I can't even enumerate the number of projects they've done across SADC in particular. But Gideon, you're sitting here in Harare. Tell us what is on your plate. Welcome to you.
Hi, Kura. Thanks. Thanks for the wonderful greeting and the great short notice. I'm happy that I spiked up the attendance on this meeting, and welcome to everyone here. Basically just going to touch on probably 4 projects that we're doing. One that's complete, and then 3 that are underway. And then briefly, probably just let just give you a bit of insights of where we want to go in terms of the business. So I'll
That's
maybe
great.
share my
Gideon, can I just
screen.
interrupt you there? I don't know what, if you're speaking into the computer or you've got a mic, but you, if I could get you closer to the mic, I think you'd be clearer for us.
I'm speaking into the computer, so let me just put on
Perfect.
my mic.
Perfect.
Maybe
This is better.
Is it better? Okay, fine, no problem.
Yeah. Thank you.
All right, so currently, hopefully, can you see my screen?
Yes, sir.
Okay, at the current moment, we've just concluded Madokero phase 2 to our first phase in that's in Madokero. We just added an additional 3,500 squares, and I'm just going to show you a couple of photos of the finished product.
For our Pan-African audience, can you locate Madokero for us? You and I know it, and you and I can go and have a drink at Emagumeni there, but not everybody knows and understands what it is.
So Madokero is a shopping center located on the western side of Harare. How else can I describe it? I guess, yeah, I think that's, hopefully I could, if I'll share my contacts at the end, and I can send you guys a pin location. Okay.
Appreciate that.
For this, yeah. So basically, we've an additional of five new tents, which, you know, we have healthy options, which is a glide time healthy shop, with electrosales being the anchor shop there. We have CBZ, Tiptoe Youth, and of course, from our first photo, we have a gym, which was much needed in the area, and Farming City, which will sell day-old chickens and, you know, just farming implements, which is different from electrosales. So that project finished, what is it, 2 days ago, and it's now open to the public, with its official opening probably coming down in the next 2 weeks. So just watch out for that. Then from there, still on the western side, but closer to the CBD, we have our new shopping center called Greenfields Retail Center, which is 11,000 square meters of GLA. This will be operational or will be open in Q4 this year. And we're very excited about this shopping center because there's a heavy focus on entertainment and food. This is located at the Zimbabwe Agricultural Show, so on Samora. And the reasons why we went to this particular place is that it, in terms of traffic, it has the most traffic. I don't think, besides this and Enterprise Road, I think Samora is one of the busiest roads. It's the main vein for the heart of Harare, I believe. I'll just show you, currently our anchor there is the Spa Group, which has been operating in the country for a very long time. And, you know, we have a mixture of food and line shops. Of course, Simbisa, holding forth with Spur, Wakumamas, and then also some local brands which have come up. I think everyone's had, hopefully those in Zimbabwe or in Harare, have had 7 Rings Donut. So there'll be 7 Rings is there as well. And also have had time to go to either Sam Levy to go onto the rollers where we'll put our entertainment for the kids. So there's a heavy focus there. I think let me continue to go on. And then I want to go to our next and what I think exciting stage, which would be the design quarter, which is across from Highland Park. This is an additional 5,000 square meters. This will be the first building in the precinct, which I'll touch on after the next couple of photos, just for everyone to kind of visualize and see what we're thinking and where we're going. And the design quarter, we're looking at having this operational in Q4 2025. And then later on, we've got our very exciting, and I really like this project because it was a short notice, but a well thought out process, which is our Cardinals Corner. Cardinals Corner is located in the northern suburbs at corner, Idi Mnangagwa or Enterprise Road, and Harare Drive, and will be delivered in 2 phases. So the first phase will have 2 drive-throughs and a fuel station, and the electoral sales box at the corner here, and with the rest of the shopping center coming through in Q4 2025. So we're very excited about this one. It's very distant from Highland Park, and if you've wondered why we've gone there, it has another call it main vein in terms of Harare, which is Harare Drive, and we thought that would capture that market, which is currently untapped, because at the current moment, the only activity on Harare Drive is either in Pomona or in Masasa by the roundabout. So we thought we'd capture that market. And then
I'm itching to ask you, what are the 2 drive-throughs? I see the Chicken Inn. The second one is?
Yeah, the second one, it's a Stairs drive-through. Stairs has been doing phenomenal in terms of Harare figures. I don't know how I know in South Africa they had a bit of a dip. But with regards to Zimbabwe, because it's new, they've been doing pretty well. And we have a case study with their figures in one of our shopping centers.
Okay. I thought we were going to have the Chicken Wars, Chicken Inn on one corner and KFC on the other.
No, unfortunately, not on this one. I think the Chicken Wars on Border Road, which is pretty exciting, where you see there's the new KFC that's just opened, now competing with the Chicken Inn by Village Walk. So we're gonna track the numbers in the next 30 or 60 days, and see how much that new KFC has affected Chicken Inn's turnover.
Okay, thank you.
Yeah, and then lastly, just giving you an overview of what we're currently doing at Terrace Africa, and call it our drive and where we want to go. What I'm showing you right now is a render with the tutorial of the Highland Park precinct. As I showed you in the beginning, I showed you a design called a build, which had the cherry sign over here, but the build has kind of changed here. But what we are envisioning is that we create our own precinct, somewhat like, or the first precinct in Zim, somewhat like Marazag, a similar setup in South Africa. And we're looking at not only doing it ourselves. As you know, 2 weeks or a week or 2 weeks ago, we went to market in terms of all the real estate agents in Zimbabwe, and called them through, and asked them to assist and help us, because we can do what we're good at, which is retail, and now we're diversifying into office space, hotel and conferencing, and it's also great to share the cake, and also allow people to actually understand what we're doing, so that we can share notes and go ahead together. So that was just a brief of what I wanted to just kind of show you what we're currently doing from a Terrace Africa perspective. If you do want to get a hold of me, I'll put my email address and the leasing email address in the chat, so you can get a hold of me or any other member of the team, and we can take it from there. But thank you, Kura. Thank you for the opportunity to shed some light on what's currently happening at us.
Thank you so much for that. Now, if you can share with us, and not asking you to give trade secrets, what's your thesis for these kind of investments in Harare? You are active. You guys have done Village Walk, Madokero, Highland Park, and you've extended that. You're now doing Cardinal. What's going on? Where are you seeing the uptake for all of these centers?
So basically, I think it was definitely from our first build, which was Village Walk, where we're oversubscribed, and we're still oversubscribed until today. And just the appetite for retail at the current moment. I think COVID also assisted in terms of appetite as new businesses and people were looking for money or looking at ways to earn revenue, and people with ideas trying to create brands from the ground up. And what we're seeing at the moment, or what I'm seeing currently, I can't speak for the rest of the company, but in terms of leasing perspective and in terms of how we get our years and income generation, there's an appetite, and there are corners of this city that have not been tapped. And due to that, we can't have one central location where everybody comes and shops. I don't think that's feasible. It's expensive. And at the moment, we are looking at definitely main roads, definitely highly traffic, high volume of traffic, densified as well. And that's what we're currently seeing. But I think with Harare, we might have tapped everywhere, and now we're looking outside of Harare. We have our Rua or our Zimri Park development, which I think we should have a go on that probably from Q1 next year, but we haven't yet finalized that. We have a new development which has just come on the table, which is in Kadoma, because Kadoma seems like it's starting to buzz. And then, of course, the highly anticipated one, which is in Bulawayo, which is by the ZRTF, which we're also excited about. So we are seeing that also before any other big developers, especially in our space or competition comes into the market, we corner and ensure that we've put our footprint across the country.
Great. Now, tell us, so you and I, both South African trained, we understand a recipe and a formula of a shopping center, 70% nationals, 30% key national tenant. What's the kind of mix that comes up in Zimbabwe? And what sort of sizing are you finding makes sense in malls in Harare?
With regards to, I think with the mix, you're starting to see, I don't know if I can, national tenants with regards, we've got our Pick n Pays and Spar, which are both not locally, not local brands. We have, in terms of our F&B, we have our Spur, which is also a national tenant, our Komamas, which is also a national tenant. And the only local ones we're seeing, so I would say probably 60-40 at the current moment, 60 national, 40 local. And also on a brand perspective, you're starting to see that there's a lot of importation of goods that are getting sold, which are not locally made. I can give you an example of Birkenstock, Safaricom. If you go into those shops, not made in Zim, but those are all franchise products that are in market.
Okay. I'm asked point blank by people, why do we not have a Woolworths in Zimbabwe?
I think you have to ask Woolworths. I think Woolworths themselves I think they've come. I think they were here before Pick n Pay, and I think they might be looking. They might be looking to come back. Personally, I haven't had that conversation with them, but I'm looking to have it in the next couple of months. But with regards to Woolworths, I think we've seen a lot of little delis or little shops opening. I think the biggest one being Harry's, followed by Kangaroo Pouch, and I think it's Techway. And if Woolies comes into Zimbabwe, all of those businesses close as well. So it's maybe for the current moment, a lot of people don't want Woolies in, though we do.
Okay. So when people are looking for shops, because I tweet about it, they say, Kura, can you get me into Highland Park? And I give them your number, and then you look and say, Kura, you sent me somebody else. What is the formula for trying to get into an established retail complex such as yours?
So basically, so I think well, myself particularly, I think there's been a growth perspective in terms of how we select tenants and having the correct and the right mix. I think first and foremost, we are looking at not necessarily being a brand incubator, but there are key factors that we definitely look at. We look at it if you know your retail space, if you know your retail business. So that generally starts from just knowing the size of shop you want, because we are per square meter charge. And if you currently don't know that you currently need 30, 40, 100, 200 squares to ensure that your stock moves, ensuring that your trading ratios match up. I think that's call it a first look at things in terms of production, or not production, in terms of vetting. Next is how long have you been trading for? I think retail is a very difficult business to be in, and a lot of people don't understand that to be in retail, you must know what you're doing. It's not as simple as just opening a shop and you just think people come in. There are people who've got emotions. There's the psychological part. There's market research about your products. There's the seasonal change of goods and services as well. So cash flows as well. We are a turnover perspective business. We do like to see that your cash flows represent the amount of foot traffic that will come into one of our shopping centers. So that's basically it in terms of, and of course, the normal FIU, AMR, credit clearance checks, and etc.
What is this thing called tenant mix? Surely you can have 3 IT guys, 4 liquor shops, because until they're all paying rent. What's this thing called tenant mix?
Yeah, no. So tenant mix is in the simple way of explaining it is just placing the right goods and services in our buildings. So the one thing we do not do is we do not allow we allow what I can say is monopolies in specific lines, not necessarily F&B. So I can't have 2 stationery shops at a shopping center. I can't have 2 pharmacies, because it affects my tenant, my revenue with regards to turnover revenue. So when you're mixing, or when you're putting shops together, you have to keep that in mind, that you're looking for goods and services that correlate and attract and can boost each other without any failure. And yeah, I think that's about it. I think it's just putting crossing your I's and dotting your T's, but just on a building, in a simple way. Yeah.
So when I stop to pick up a coffee at Highland Park, my phone taps into the Wi-Fi. What's your upside in putting in Wi-Fi in a shopping center?
So the upside is that you stay longer, and convenience. I think and also, there could be instances where, call it, network's down, you can't recharge your phone, and it could be also used for emergency services as well. But mostly we've put in Wi-Fi so that our clients stay longer at the center and enjoy just being there. Having people working at our shopping centers is where we're looking to grow. Where the longer you stay there, the more your appetite to get into another shop and buy something.
So you're not being my friend. You just want more money from me.
No, not necessarily. I said emergency service. If you're in trouble, you can, and you can contact someone. If you don't have, call it data or something.
No, wonderful. No, it's a good innovation to see, and I hope as data prices get cheaper, as they're threatening to, that we can have more connected place, because I think internet is a multiplier. When you're now looking If something's not in the shop, I can look it up online and find another shop that has it, and it just facilitates business better.
100%. And
Yeah.
have you ever been in a print shop and you want to send something for print and you don't have Wi-Fi, and you're asking, then you start asking you might have 60 different or 30 different Wi-Fi pin codes.
Yeah, I have known that frustration.
Yeah.
So I'm going to close it off, or my questioning. And if everybody's got a question, you're more than welcome to put up your hand and ask the question to the retail guru here. But my question is, what is the one thing that you think is missing in the Harare or the Zimbabwe retail landscape? What have we not got, but what is a concept or a brand or a category that we're just missing?
That's a $1 million question. But I think currently is a sports bar. I think we're currently missing the old sports diner. And why I'm saying is that you want to come to a shopping center where the kids have fun, the wives have fun, also the husbands, or just the singleton people can go watch something and stay longer. So I haven't seen a really kitted out sports bar for a very long time. I remember the Keg and Sable days. I think they were ticking. So I think that's for me. Besides food, I think food we haven't even tipped the iceberg. There's a lot of brands which are coming in. Some not at our centers, just around Harare. I don't know how Blue is doing, but definitely I think the likes of La Prada is coming to Zim now. Romans is coming to Zim. So for me, currently what's missing is a really good sports bar, and we are a sporting country where we do watch a lot of sports.
No, the only risk when you have something like a sports bar is when you get Arsenal and Manchester United fans, because they'll always be losing. So, you just get upset customers.
Yeah, wow. That's the beauty of it. So, yeah.
Now, Gideon, I thank you so much for coming through onto this call. I really appreciate it. You jumped on the opportunity, and I am particularly grateful for that. I don't know if any of our guests want to ask any questions. Okay, I don't see any hands up. I don't have any questions in my inbox. So I'm going to pass the microphone back to Thabiso. Thabiso, thank you very much for the opportunity this evening. Back to you, my brother.
Before you give it over, I wanted to ask Patience a question. With regards to clusters, you believe if you, hopefully we're on the same wave pattern, or I've caught you, is that clusters are not making for people money if they hold them, but if you sell them, you will make a profit back. Did I get you correctly?
Okay. I think you will make a profit either way, because if you look at Zimbabwe, we do have a shortage in the rental market. So if you do rent them, you do make money, but in the short term, and you do make money in the long run. If you rent them, initially the people that first went in were making as much as 200, 250%. Now it's gone to 100%. And with the clusters continuing to come in, you'll find that the profit margin continues to decline. And right now, if you look at the clusters that are coming up, we've got a lot of clusters coming up, which will obviously eat into the profit margins, because everybody's going to have to lower their prices for them to be able to sell. So it depends on what it is that you want to look at it. So building to rent, I think I would go that way. It does make a lot of sense in that you make much more money, although it's not immediate. It's in the long run. So if you're looking at investment like for a retirement, that's a good investment package that people should consider. I'm not sure if I've answered you there.
No, you have. I'm just curious, and also with regards to what is call it the rental threshold when call it defaulters start coming, especially in these clusters that are coming up. Like, I've seen some of them want 1,200, 1,500. Like, what's call it the rental rate when you call it in this market? Then you can be like, I don't know if this person's going to be able to continue paying this for call it for 12 months.
Okay, in Zimbabwe, we have a bit of a challenge in that most of the people here not formally are not in the formal system. They run their own businesses. So in terms of being able to prove how much money they make, in a normal system, you take your paperwork to the bank and then they vet whether you are able to perform. So it's basically just a risk. When you do notice a challenge, you then give someone notice. So it's when people struggle to pay, that is what gives you an indication of whether they will be able to continue paying. But there's a lot of money being made in the informal sector, which is the biggest employer in Zimbabwe. So it's $1 billion industry that's out there, although there may not be paperwork to back it up. So in terms of pricing, I do have some, I think about 30 clusters that I do manage, which is 24, it's in Rua, 24 kilometers from Harare. There are 3 bedrooms and it's quite far from the CBD, but we're getting as much as $700. So when you're looking at within close to the CBD, the rentals vary from about 800, depending on the size, to as much as 2,500.
No, okay, no, thank you so much. No, I just wanted to just find out, like, I have, I think from our side, I kind of understand the rental base when, some people start to struggle. And though they want to, carry out their business, but, sometimes it just won't be taken. But thank you so much for that update.
Dankie. Tabiso.
Thank you so much, Kura, Patience, and Gideon for joining us, and to all of our attendees who joined us today. It was very insightful, and I hope you'll have a great evening as well. On our side, basically, it's just awaiting the elections outcome, and then we will take it from there. Thank you so much to everyone who joined us.
No problem. Thank you, everyone, as well. Cheers.
Thank you so much.
Thank you so much for having us.
Okay. Good evening and cheers, everybody. Until we do this again next month, have a pleasant evening.